Capsim Capstone 2024 to 2025, Round 1 Winning Strategy. Opening, set the stage for success. Hello and welcome back to the Capsim Capstone 2024 to 2025 training series. I'm excited to guide you through the full breakdown of Round 1, setting the foundation for an entire season of business success. This video is part of our Top 10 Free Winning Tips series and focuses entirely on making smart, strategic decisions in Round 1 to set yourself apart from the competition. Whether you're new to CAPSIM or already have experience, this session will show you how to read and interpret key reports, set up your company strategy from day one, understand why each decision matters, avoid common mistakes made by most teams. With the right strategy, it's absolutely possible to hit top results, including a 999 score in CAPSIM. Let's get started. Section 1, Overview of the Simulation Environment. In Capsim Capstone, you manage a sensor manufacturing company. Your products are components used in electronics. You're competing against 5 other companies in the simulation: Andrews, Baldwin, Chester, Digby, Erie, Ferris. Each of you starts with 5 existing products. The market is divided into 5 customer segments, each with different needs: low-end, price-sensitive customers; traditional, mid-market; balance between specs and price; high-end, value; cutting-edge technology; performance, prefer speed and reliability; size, prefer small, compact products every year; or round, customer expectations shift, they want faster, smaller, cheaper products. Your job is to keep up and outperform your rivals. Section 2, Tip number 1, always begin with the Industry Conditions Report, ICR. Think of the ICR as your market map. This report tells you what your customers want and how that will change across the 8 rounds. Focus on 3 critical tables. Table 1, Segment Drift, tells you how performance and size expectations change each year. Table 2, Ideal Spots, shows the location of the ideal product for each segment in year 0 to year 8. Table 3, Customer Buying Criteria, reveals how important each factor is: price, age, MTBF, reliability, etc. Example, in low-end, customers care 53% about price and just 9% about positioning. In high-end, positioning and age dominate, while price matters very little. Bell Pro Tip: use our free Excel CI, Competitive Intelligence, tool to automatically calculate the coordinates for each segment each round. We've preloaded the drift rates, saving you time and helping avoid mistakes. Section 3, R and AMP winking and laughing. Strategy, product updates and new product introduction. In Round 1, set a strong R and AMP winking and laughing foundation. Your product must move toward the segment's ideal spot. From ICR Table 2, maintain acceptable MTBF, within range, be launched at the right time. If new, key strategy, update all existing products to match expected coordinates. Introduce at least 1 new product in low-end or traditional segments. Why focus here? Traditional equals 32% of the market, low-end equals 39% of the market, together equals 71% of the market in Round 1. Even though other segments grow faster, 16% to 20% growth/year, they start small and will take time to become profitable. Brain: create a 6th product with the right name, e.g., Able 2 or Ace 2. In low-end Brain, use the CI tool to set exact performance/size coordinates for your Round 1 update. Warning: don't overdesign your products. Faster and smaller isn't always better if you miss price or age targets. Section 4, Tip number 2, Mastering the Marketing Decisions. Price, promo, sales budget. Once your product is ready, it's time to sell it. In CAPSIM, marketing involves price, based on customer sensitivity. From ICR, promotion budget, builds awareness; sales budget, builds accessibility; direct hit, segment-specific price strategies. Low-end, target around $20.50, max $25. Traditional, $28 to $29.50. High-end, $39.50. Price isn't important. Performance, $34.50. Size, $34.50. Bell: remember, these prices are not universal. Adjust based on your own simulation. The logic is what matters, not the number. Money bag budgets, set promo and amp, sales budgets at $2,000 each for traditional and low-end $1,500 to $1,800 is sufficient for niche segments. Section 5. Tip number 3, forecasting sales and production. You've set R and amp winking and laughing in pricing, now forecast demand and match production. How to calculate sales forecast. Check last year's sales, apply segment growth rate, table 3 of ICR, adjust for positioning and price competitiveness formula, forecast equals, last year sales, times, 1 plus growth rate %. Then calculate production, production equals forecast, inventory abacus example, forecast, 1,500 units inventory, 100 production equals 1,400 units. Pushpin tip, avoid overproduction, inventory is taxed and reduces profitability. Section 6, tip number 4, managing capacity and automation. Production needs machines and labor. That's where capacity and automation come in. Capacity, units, equals how many you can produce per product line. Automation, 1.0 to 10.0, equals how efficient your machines are. Direct hit strategy, for high demand products, increase capacity. For older, declining products, sell off capacity. Chart increasing automation targets, low end, increase to 7.0 or higher. Traditional, 5.0 to 6.0. New product, start at 5.0 and increase slowly. Warning note, high automation slows R and amp winking and laughing updates, so balance carefully. Section 7, tip number 5, financial management, funding your strategy. Round 1 requires heavy investment, R and amp winking and laughing. Marketing capacity / automation. Fund these using retained earnings. First, short-term debt, moderately, avoid long-term debt and stock. In round 1, key metrics to monitor: cash position, emergency loan risk, total equity, total debt. Pushpin target a cash buffer of $3 to $5 million by end of round 1. Section 8, optional modules, HR and TQM. If enabled, some versions of the simulation will have HR and TQM tabs starting round 1. HR strategy, spend $1, $500, $2, 000 per category, recruiting and training, improves productivity, reduces turnover. TQM strategy, select 2 to 3 initiatives in round 1, spend $500 to $1,000 each. These investments pay off over 3 to 4 rounds in reduced costs and improved margins. Section 9, tip number 6, post-decision review, understanding your results. After you submit round 1, you'll get a full dashboard, income statement, balance sheet, market share report, contribution margin by product, key success signals, sales growth from $100 million, $170 million, profit margin and GT, 10% inventory close to zero, market share lead in traditional and low-end, stock price increase. Brain review, what worked and what didn't. This prepares you for round 2. Section 10, final advice, learn strategy, not just numbers. I'll say it again, do not copy exact numbers. Each CAPSIM game is different. The simulation may give you slightly different coordinates or starting conditions. Instead, learn why a price works, learn how positioning affects demand, learn when to increase automation, learn what to watch in your financials. CAPSIM is not a copy-paste game. It's a strategic decision-making game. Closing, get support and continue winning. If you follow the 10 tips, read the ICR carefully, use the free CI tool, update R and amp winking and laughing based on drift, add new products in key segments, set prices based on segment priorities, forecast sales, logically align production to forecast, adjust capacity and automation, smartly manage finance, wisely learn and adjust each round. You will not only perform well, you'll dominate. Need help? Get free support for round 1 and 2. Email bahelp2002@gmail.com or mbassam1999@gmail.com. Full 8-round support, $60 via PayPal. Pay only after round 2 if satisfied. Watch our next video on round 2 winning decisions, and keep building your lead. Direct hit. Don't just survive CAPSIM, lead it. Win it. Master it. Thank you for watching and see you in the next video.